Good morning, students. Today we are going to see MTP Series 1, December 25, question number 2B for 10 marks of inventory valuation. They have given India Craft Limited keeps no stock record but a physical inventory. Physical inventory, all of you understand that it's an actual counting of the stock taking the value. They have taken the value at cost. Okay. And the company's year ending is on 31st March 25. And what they do, they have been prepared the accounts up to that date. And the stock valuation is taken as on 31st March 25. However, it's misleading and you have been advised to value the closing stock. They say that there are some discrepancies, differences. It's misleading. So you are asked to value the closing stock at cost. Okay. And using the stock figure 31st December 24 because they have the practice of taking the stock at the end of each quarter. So at the end of quarter 31st December 2024, they have taken some figures along with some additional information. So what we have to do, we have to see is there any discrepancy and we have to adjust those things and find out the closing stock as on 31st March 25 at cost price. That's it. See what we have to do. Any figure given to you. This is the quarter ending 31st December 24 is given to you. Okay. Any changes in this, we have to adjust this. So simply thing is that after 31st December 24, because this is physical inventory given to you, understand that physical inventory given to you, whatever the actual purchases made and goods received at their shop, we call it a shop. You can take it to the site also. Okay, actual purchases made and received, purchases made and received has to be added back to this. That's it. We have to add back this and any purchases returned because that stock is not available with us during Jan to March. They have given the figure as on 31st December. During Jan to March, whatever the purchases made and they received, stock received at site has to be added back and any purchases returned has to be removed because that stock is not available with us as on 31st March 25. And you have to subtract the sales made during, first if you understand this, the sum will become very very easy for you. Sales made during Jan to March, you have to remove it because the goods are not available at the shop. Okay, so at cost, we have to do it at cost. That's it. One point you have to keep it in mind. Sales made during January to March and the goods have been actually dispatched and delivered, not available at your site. That has to be removed. And any sales returned during this period means that is received from the customers for which you are going to issue some credit note and that stock is actually received at your site has to be added back. This should also be done at cost. Only thing is that here you have to remove the profit margin. Okay, gross margin you have to remove here and purchases actually made and received. That's it. The sum will be over. What you will get at the end, the figure will be your actual stock available as on 31st March 25 at cost. Okay. So now we will see one by one. Hope this will make you very, very clear. Okay. The stock given as on 31st December is 95,000. And what they say that when they were writing it in the cost sheet, stock sheet, sorry, when they were writing it on the stock sheet, or you can imagine of a register, they are entering the amount one page wise, they are entering it. When they were carry forward one page to another page, there was a error of overvaluation. Instead of 20,000, they wrote it as 21,000. So there is an overvaluation of 1,000. Okay, sorry. Okay, see here, this is a page total of 20,000 has been carried to the summary sheet as 21,000. So we have to remove that 1,000. That was a error of overvaluation. Then next one, when they were totaling a page, they made again a mistake of totaling less under cost of 15,200. Actually, the stock was there for 15,200. So you have to add back. Okay. With this cost of stock as on 31st December, add the undervaluation of stock for 15,200. So what you are getting, 1,09,200 is available. Now to this, we have to add the actual purchases made and stock received. Okay. So that's what I have done. Add purchases made during January 25 to March 25. Invoices entered. See here, you have to read the lines very, very clearly. It is not actual stock received. They say that invoices entered in the purchases book during the quarter Jan to March is 85,000. Out of this, 18,000 related to goods received prior to 31st December. These goods have been already received before 31st December, and this is available in this 95,000. Okay, already it is received goods. Only now they are entering the invoices. So we have to remove this from the purchases because purchases have already been taken care of. Okay. So next thing they say that goods invoices entered in April, but goods received in March. So in this amount, 85,000, this was not taken into account. So you have to take this into account. Clear. See here, the stocks which were received already prior to 31st December. So it is already taken care of while they were taking the stock valuation as on 31st December. So now we should not do add it again. So we have to remove this 18,000 from 85,000 because invoices have been received right now. Clear? Now they have received the stock during this quarter, but it is invoiced in April. So this was not included in 85,000. So now we have to add back this. So the net figure is 86,000. This is the actual purchases made and received during the quarter Jan 25 to March 25. So this we are going to add with the stock already available as on 31st December, 1,09,200, and we are going to add this. So now we have got a stock of value of 1,95,200. Out of this, how much was sold and dispatched and delivered? We have to reduce that, decrease that. Okay. So sales, that's what I did in the third point. Sales made during Jan to March 25. There is also some adjustments. See here, it is invoiced again. Sales invoiced to customers 1,05,000. Need not be the actual goods delivered or dispatched. So now they say that out of this 20,000 dispatched before 31st December 24. So that was also taken care of in this 95,000. So we need not to worry about that. We have to remove that 20,000 because only invoicing is made right now. So I have removed that. Then they have dispatched during 31st March, Jan to 31st March, 19,000, but they are invoicing it in the April, which is not included in this 1,05,000. So you have to add to sales made during Jan to March 25. Hope you are clear with this, because 85,000 is the, sorry, 1,05,000 is the invoices made. Out of that, 20,000 was already sold, and the 19,000 which is sold is not taken into 1,05,000. So I have added back. So now 1,04,000 is the actual value of goods sold, dispatched, and delivered. Okay. So from this we have to remove the gross margin. Gross margin only, then only we will be able to know the cost of goods sold during Jan to March. Okay. They have given in the question the profit margin is 25% of cost. So that is, you already know that it is 20% on sales. I need not explain this. So 20% on sales I have taken out, so that the cost of goods sold is 83,200. We have got 1,95,200 stock was available. Out of that, 83,200 were sold. So the available is 1,12,000. With that, one more adjustment, that they have received one item of value 16,000 from the customer who has returned the goods, and credit notes at invoiced value. Invoiced value is 16,000. So that has also to be calculated at cost. So we have to remove the gross margin from that 16,000 value of goods received. That is the sales return during Jan to March 25, which is available in the shop. So you have to add back that. So profit margin is 20% on sales. So 12,800 value cost of goods returned. This is the sales return. So that is added to the net of the value of purchases. First stock, we have added the purchases, actual purchases made and received. Then we have subtracted the actual sales made and goods delivered and dispatched. And to that value, we have now adding back the sales return of 12,800. So now the cost of goods available at site is 1,24,800. This is the closing stock at cost as on 31st March 25. Hope this is clear to you. Please share my videos and like my videos. If you like my videos, please give a thumbs up and leave your comments, and what type of questions you need more, you can leave it in the comments so that I can work on that and share it with your friends who are all interested in preparing for their foundation exam. All the best for all of you. Thank you for watching.